early light, what so proudly we hailed at the twilight's last gleam, whose broad stripes and bright stars through the perilous fight and the ramparts we watched were so gallantly streamed, and the rocket's red glare, the bombs bursting in air, gave proof through the night that our flag was still there. Oh, say does that star-spangled banner yet wave o'er the land of the free and the home of the brave.
Good morning, coming at you live on Rumble, X, and YouTube. This is World HD every weekday, 8 a.m. Eastern Time. Today is Tuesday, October 7th, right? October 7th, 7th day of the shutdown. Yeah, so I think there are two sevens there. We've got October 7th and 7th day of the shutdown. I think that's right. Yeah, October 7th. Yeah, okay, good. Just double checking. Of 2025. And good morning to our early risers and truth seekers out there. Last night, Aaron Day did a great show on digital ID. I'll include the link below the show once we are done. It's worth watching, a little bit shorter than some of the ones he's been running lately, but very good. And I'll talk just briefly about that toward the end of the show. So on Tuesdays, we like to deal with debt markets, and there's quite a bit going on in the debt markets. There's a signal we have going. There's a signal in the debt that that in the 10-year, across the whole spectrum of the yield curve, really, the 5-year notes, the 10-year note, I think even in the 30-year bonds that we want to take a look at, a monthly signal. And then we're getting pretty overvalued in the stock market. We've got overvalued in the daily, weekly, monthly. I'm going to show you that today too. I think these things could go hand in hand. There's also some movement going on in the currencies, and so I'm picking some things, not a lot, a little bit in the British pound. Okay, so that's curious with a couple of things that are going on in the UK. Obviously, France is the big one right now. We had the elections, the LDP elections in Japan over the weekend. New prime minister, and in Japan, and so they have a new government. France is on the ropes right now with Macron and Lecornu, the president Macron and the prime minister Lecornu. Both in some hot water. And what are the implications on this for the European Union? Because I want to go through that today. I think this is a good opportunity to talk about the formation of the EU, the formation of this currency that the EU uses, right, the euro, and why something like this starts to cause it problems. So I'm going to go through that. I think it ties into debt pretty well. And so that's pretty much it. We'll go through the economic data. Let's just go ahead and hit that right out of the gate. I want to hit that and all right, clear this. Okay, I think we're good to go. All right. Okay, so a lot of central banks speak around the world this week. We had Christine Lagarde. I'm going to talk about her a little bit more today when we talk about this euro and the cover-up job, right, that she's trying to put out there right now. This whole thing with France, a big problem, and she's talking about one thing. She's talking about growth and how the euro can become more of a player around the world. And actually, I think it's the exact opposite, right? There's a fracturing going on that she's going to have to cover up, right? She's going to have a cover-up job coming soon if they can't get this France thing worked out. And even if they get this France thing worked out, it's going to resurface, right? You know, because worked out is never really worked out. That's the problem, right? In a lot of these politicians' minds, working things out just means kicking the can down the road. It really doesn't really ever mean solving the problem. So that's what we're looking at on this. And so I'm going to come back and take a look at that. I just want to make sure I have sound. There's always little technical issues. Just nothing can ever. Part of it's my own problem. I got 35 monitors around me, and so part of it's my own issue. Okay. Anyway, and then Bank of England Governor Bailey was speaking yesterday. There was a 30-year bond auction. We'll take a look at that. In Japan, it actually went off quite well, surprisingly, amidst all the and that's going to be Takaichi's job. Okay, is trying to get people to buy their debt and trying to lure people back into the Japanese economy. And stranger things have happened. Maybe. That that people will start wading back into the Japanese system and the debt markets. It seems I don't know what could cause that. There are things, right? Stranger things have happened. Okay, so that's going to be her big job is trying to working with Governor Ueda, all right, of the Bank of Japan, and he's going to be out speaking tonight late. I don't know the exact time. I don't know if they've actually released the time, but I want to pay attention to that because it's going to be the first time that he's been talking since this election went this weekend. And again, it's a lot of formalities and a lot of things. So you have to sit through a lot of garbage until you actually hear what's really coming out of it. So that'll be the process with that whole situation. But again, out speaking tonight, first time since this change has taken place in Japan. This is a significant change in Japan, I do believe. All right. And, okay, so let's keep rolling here. German factory orders, we'll take a look at that here in a second. Swiss currency reserves, take a look at that. And then again, more Fed speakers today. There's more than this, right? I just listed the three big ones that I think will probably have something to say. Why is that? Well, Bostic is, I'll let that be. Bowman was one of the ones that was a dissenter prior to Stephen Moran coming into the FOMC. And then this last meeting, she didn't dissent. Okay. Now, where is she going to stand? Because the Fed's in a bad spot too. Theoretically on paper, the interest rates, the inflation is then, how do we put this? Yesterday, Ken Griffin was out, okay, of Citadel, big hedge fund guy, pretty powerful person. He was actually, just to give you an idea, he was one of the ones that helped name Warp Speed, right? As we went into the recovery from COVID, the supposed recovery. So this guy's a heavy hitter. Citadel's a pretty big hedge fund. And when he talks again, I'm not a huge fan, but nonetheless, just because I knew people that knew him growing up in Chicago, and so I didn't grow up in Chicago, but they did, and they knew him. They went to school with him, and so forth. And so his rise to fame at this Citadel is a little bit questionable in some ways. Nonetheless, he is a heavy hitter, lots of assets under management. He definitely has the ear of the administration or any administration when he wants it, and probably around the world too. And so he was out talking yesterday, saying a lot of things like gold being at this high is very concerning. It's really a move into de-dollarization. And talking about, this gold being an unstabilizing force, right? That this is, and also talking about the AI spaces, in the economy, the stock market's on a sugar high. And I can't disagree with them on that because I'm going to show you the model here in a second, and we'll look at how overvalued things are on the daily, weekly, and the monthly in the S&P and the NASDAQ. And remember, those were the two that we had the harmonic structures in. So it's not as overvalued in the Dow, and it's not as overvalued in the Russell, of course, right? It's really those two. So again, those are the two that have been driving things. And so Ken Griffin's kind of singing the same tune, that we're on a sugar high. And then we're going to talk a little bit about AMD and this OpenAI chip pact, right, that came about, and how and the optionality, right? People are acting a little concerned, right? OpenAI, right? We know Sam Altman, the whole AI front, probably the leader in the AI space. That XAI, OpenAI, right? This Claude. There's a lot of different ones out there, right? Google has theirs. All these different AI, competitors against each other, to who's going to have the the artificial general intelligence, right? That's the real goal here. And why is that? Because this leads right into that technocracy. So this is why the technocracy is so important, because these are the missing elements and keys that drive toward that. Okay, so the option out, and I'll talk about that here in a second. We'll come back to the OpenAI and the AMD. All right, but I wanted to throw that in the mix because a quarter of the economy right now, a quarter of the movement in the stock market, if we can still relate the stock market to the economy, right? And I think there's been a separation in years past. But if we still want to relate those two things, a quarter of the economy, a quarter of the stock, maybe a quarter of the economy, maybe more than a quarter of the stock market move has come from, right, this AI push. And so that's what Ken Griffin is out saying, is that it's on a sugar high, and he talked through it pretty well. He said, there's a lot of money being spent, and it somewhere in the next whatever window of time, 5 years, 10 years, 20 years, whatever the window of time is, right, that's acceptable to the investors, to the people putting this money up, all the hyperscalers and so forth, what's the amount of time to recover those returns? Is it going to be quick, right? Is it a quick recovery, or is it not a quick recovery? And my question is, does that even matter, right? If we're in this technocracy space where someone's looking for, and who's backing this whole thing, right? That's the other question, is who's backing this situation? Who is the driving force? Because I don't believe that Palantir came out of nowhere. I don't believe that Zuckerberg had this idea in his dorm room. I don't think that Bill Gates had any ideas in his dorm room. I don't think, the vast majority of these big, AI companies that we see out there, I think they were influenced and driven by other forces. Okay. And we see this through, again, Jeffrey, it's so many rabbit holes you can go down. We see this through Jeffrey Epstein, his connection to Robert Maxwell, Ghislaine Maxwell, and Ghislaine Maxwell's sisters who went to Silicon Valley, right, and were part of the whole Silicon Valley uprising, access to data out of the government, access to different things. So they were very fundamental in the formation of Silicon Valley as we turned from the 1990s into the 2000s, and we entered into pre-tech 2001 tech bubble, okay, which again, and that's the concept here, right, is we get this big push and this big run up into the tech bubble of 2001. Okay. And then this market collapses. People lose money, not the people in the know, because again, they were front running all this, and then they're getting out as they create the hype. Okay. And then they dump it. And yet, guess what happens? The people end up absorbing the losses, but somebody gets to run away with all the technology and all the productivity gains. And it's not us usually, right? We might get to use those productivity gains, those different things, but we're not the recipients. We're not the benefactors of all that technology gain. So that's my question here. And that's where Ken Griffin, I think, is getting to. He's not going to say this, but I'm trying to dig a couple layers deeper in the onion to say, if we're going to create some sort of a run up in a bubble in this AI space, who's going to take the fall? Is it going to be the same game again, right? Are we, the people, going to take the fall on this? Pulling all the money in off the sidelines, out of the money market funds, right? All the 401ks totally invested, everything totally invested. And these guys really don't care if there's a profit on the backside, because they've already received their profit, right? The run-ups in NVIDIA, the run-ups in all these different things, all these different stocks that have already had the run-ups, maybe they've already taken their profits and they're about to start dumping it on the people. It's a process, right? It doesn't happen overnight. You can't dump this on the people overnight, but you can start to dump it. So that's what we're going to be watching for with the markets, right? We're going to be watching for footprints, right? Do these elephants leave footprints? And if that's the case, then they may not even care, right, if there's a return on capital, because it's really about them getting to this position, getting to the starting line, or getting, into the middle of the race, getting what they want out of it, and dumping the garbage, dumping the leftovers on the people or whoever they can. And then they run away with these systems that lead to this technocracy, right? The control, right? The technology, the software, the social credit scoring, right? The ability to monitor, track, surveil, control money, control the flow of money, control what money's used, control how it's used, control universal basic income. So essentially, try to morph into this universal basic income. The good thing is we saw in the UK that they resisted this digital ID, okay, or they at least they're trying to. They tried to. They put out a petition, and then the government came back and said, we're going to do it anyway, right? So that's where we're at, right? We're at this battle, right, where the clashing of the people is coming together with these fallen these governments that are, again, nothing but a shield for this big business to hide behind. Nothing other than potentially this sovereign, that maybe we need to think about it that way, that these governments are nothing more than a shield for the technocracy to hide behind. Okay. All right. So with that in mind, the back to the data, we've got a lot of speaking this week out of the central bankers. Okay, nonstop. 13 this week. That's the thumbnail that I put out. It's got a big chunk of the different speakers this week. So 13 plus speaking engagements out of our FOMC members, and Lagarde and Bailey. And, this Ueda is going to be speaking, and Powell's speaking this week, right? So he's kind of in a category of his own, even though he's basically winding down his tenure as chair of the Federal Reserve. He's speaking on Thursday, and then on top of that stuff, we get a couple bond auctions. In the U.S., we get a 10-year bond auction. We get a 30-year bond auction. Today's debt day, I want to talk a little bit. Maybe we'll even look at this. I don't really have the chart set up, but maybe we'll stumble through it, is to look at the German bobble, right? So the U.S. has the biggest debt market in the world. Then Germany has the next biggest debt market in the world. And we saw the worst bid to cover, come through yesterday in the German bobble, which is essentially their 5-year note. And so this isn't good, right? So we're seeing these fractures all over Europe. We're seeing these fractures. Japan, right? We put a Band-Aid on it with Takaichi temporarily, right? We're probably going to get more stimulus. We're probably going to get Ueda coming out and backing that tonight, right? That's what's going to be interesting to watch in the speech. Is he going to back it? Are any of our FOMC members going to talk about France? Are any of them going to talk about Japan? Because when I think back to President Trump, again, he's right on a lot of things, and he keeps saying Jerome Powell is too late. Too late, Jay. Too late, Jerome. Jerome, too late, Powell, right? All these different nicknames he's trying to give to him. Does President Trump, is he aware that this is going to be maybe an external issue? Is there a bigger issue going on, right? And a reason to lower rates, right? To be lowering these rates right now that they can sort of see ahead of time. All right. Again, he's got Scott Bessent. I mean, you can't forget Scott Bessent's background, right? I mean, he worked for Soros, and he worked with Stan Druckenmiller and George Soros and Scott Bessent. The three of them were the ones that predominantly orchestrated the takedown of the British pound. Okay. In the, forget which version it was, early 90s, I think. Anyway, I forget the time. We have a signal of the British pound. Maybe we'll look at that one day this week and talk about that. Okay. So that's the big takeaway. Lots and lots of talkers, lots and lots of talk this week. Government shutdown. We're not getting data. Okay. So that's not a factor this week. Probably won't be a factor. It doesn't look like they're tossing it back and forth, right? Schumer's saying it's Trump. Trump's saying it's Schumer, the Democrats, right? And again, what are they watching? They're watching the polls to see, like, okay, how long can we let this thing go? How long can we keep pushing until we can get what each party wants? And are they even, sometimes I even wonder if they're not even, again, this isn't anything novel, but are they even on the same side, or are they on separate sides, right? Is it all, that's what we have to ask ourselves. Are we on one side and they're on the other, or are they really, is there a portion of the U.S., of the U.S. citizenry with part of the, with the Democrats and part of the U.S. citizenry with the Republicans? Or is it really just them against us? I don't know at this point. I'm not sure what the sides are. Okay, so that's the overview of the week. And then, okay, so we've got, all right, so we've got this. Okay, so looking back yesterday, out of Switzerland, again, flat data on the unemployment, just watching everything there. Again, more Fed speak, and then 30-year bond auction was expected to come in at 3.26, came in slightly lower yield at 3.25. Bid to cover was expected at 3.3. It came in slightly higher at 3.4. So slightly lower rate and slightly higher number of interested buyers in that debt. Okay, and it's longer term. So this is 30-year debt that they're buying. So this isn't 5-year debt, 10-year debt. This is people with long-term outlooks. And the question is, who is this, right? We never really know. We never really know who this is. Okay. Okay, so the German factory orders came in quite negative. 1.2% is where it was expected, came in at minus 0.8. Okay. Problem. Okay. Keep that in mind, right? This is going to go with this whole thing with France. All right. And Christine Lagarde and her need to try to cover this stuff up. All right, foreign currency reserves out of Switzerland expected at 715 billion, came in at 727 billion, so better than expected. Now, we'll continue. I just want to throw that out there. I'm kind of watching this more than anything to see like what's really going on with Switzerland. I did set up the Forex chart, so maybe we'll take a look at that one today too. And I think we will. Let's plan on doing that. I wish I had a really good list of. It's amazing. Sometimes you spend a little bit of time preparing, and I'll just leave it at that. The chart, I don't know which charts we're going to cover today. I know I want to cover a couple of the debt market charts, a couple of the stock charts. I really want to show the output of the model. That's really what I really want to show today, so that we can talk through that and you can see how overvalued things are and some of the signals we have in there. The charting sort of comes secondary, but we'll do it anyway. We'll look at some of the charts. Okay. And all right. I'm just getting blown up today on my phone. Okay, so I think we're through everything there. We get a little bit of data out of the Canadian trade balance at 8:30, and then we get U.S. trade balance. Now, this is tentative. I think that this one is, of course, this should be a federally driven number, so we're probably not going to get it. And then again, you can see nonstop Fed speak, Bostic Bowman, Moran Kashkari, and then that UATA speaking tonight. We don't know when, but it'll probably be. So Japan's about 12-hour differential from the East Coast time. So, you're probably it's usually like 10 to 11, somewhere in that time frame they'll be speaking. So again, I doubt anybody in here is going to want to tune into that, but I probably will. All right. And then we'll skip that. And then we'll be good with that. I'm not going to do any headlines today just because we can work through this stuff. I probably should, but all right, let's go to this. And, okay. All right, so let's go through this quickly. So AMD soars on a huge OpenAI chip pact. And the question is how to scale to target by 2030, right? Again, this 2030 agenda you see it everywhere, all right? It just pops up all the time on the energy front, on the technology front. And so, even probably on the secure ID front. And so this is the indication that this is some sort of a plan. Okay, when you see these dates popping up over and over and over again, and we've talked about this in here and we look at the charts, right? We see mid-2022 showed up everywhere, right? There was so much stuff going on in mid-2022. To do what? To drive up inflation. What does that do? Puts the power in the hands of the few and weakens we the people, okay? Because it makes things more expensive for us and it drives up their assets so they get wealthier. This is what we were talking about at the beginning, right? Them getting wealthier, right? And then leaving us with the bag, okay? And then now with the ability to go to potentially this technocracy and controlling us, then it's more, and with all the surveillance stuff that's in place and the ability to track our activity everywhere, it's a game changer, right? It's not what it was in 2001 when we saw the NASDAQ bubble blow up, burst, right? People lose money, lots and lots of money, but the technology and the productivity gains remain, okay? And who gets that? Not us, right? We're not the direct recipients of that. Maybe some small business owners were able to capture some of that, but the vast majority was probably the big players, right? The big Silicon Valley players, because they were behind, they didn't create it, but the government and the private equity and these others, whoever's driving this whole thing, right? Whoever sits behind the system, okay, and pushes some of these buttons, whether it's really well orchestrated or just partially well orchestrated, again, it's fear and greed. It still boils back to that. These people are afraid of getting caught, so they so they hide behind the scenes, and they're also very greedy, so they take whatever they can get, right, to get more power and accumulate more power, and basically become, faux gods, right, in their minds anyway. And that's what this technocracy and this sovereign and this stuff leads to. Okay, all right. So AMD, right, there was, just to leave this quickly, they leave it pretty quick and simple. OpenAI wants access to AMD chips, but they're not willing to make too big of a commitment. So they created some sort of an optionality where they could actually take a stake in AMD somewhere down the road if all goes well. This isn't an abnormal thing, and it's not a bad structure. It's just peculiar to come along at this time because we see this massive, this spend, right, of hundreds of billions of dollars. and the talk of $3 to $6 to $7 trillion of spend coming before 2030 again. Okay, so lots and lots more talked about going into this AI between now and then. And the question is, can they pull this off, right? Are they going to be able to pull this off? Are they going to be able to find the money to do this? And if they are, where is it going to come from? Because we even see Oracle, one of the wealthiest tech titans out there, okay, plenty of cash going to the debt markets, right? So is this a strategy to dump this on us, to dump it on the system? Or are they actually, even with all the money that they have and all the free cash flow that they spin off, are they still seeing debt issues, right? That's the question. Okay. So the interesting structure fits. There's going to be another deal like this. Every day there's a tech deal going through like this. And it's amazing how fast it's moving. All right. Okay. Then let me see if it's time. I want to switch over to, let me just cover this headline, right? We have tariffs have been in the mix, and we saw the pharma stuff last week. The week before, we saw some things with automotive, large trucks. So large and medium trucks, okay, the date is now set for that tariff to come into play, and that's going to be November 1st, right? So all medium and heavy duty trucks coming into the U.S. will see 25% tariffs. And so this goes back to what Ken Griffin was saying, and this goes back to the inflation. And it goes back to this battle between, we haven't really gotten inflation to target, which is 2%. So that target's either going to have to either be ignored or shifted, okay, to 3% more than likely, maybe even higher than that, maybe 3.2, 3.3. And that's, again, that weighs on all of us, right? The inflation factors. Then and so as we go into as we go into 2026, and we're looking for 2 rate cuts this year out of the Fed, October, December, and then we go into next year and they're looking for 2 to 3 more rate cuts in 2026. If this inflation does creep up, okay, and President Trump said it wouldn't, Scott Bessent said it wouldn't, Lutnick says it won't, okay, it's not going to happen. But if it does, then this whole Fed rate cut thing the whole story's blowing apart, right? Because now and what does this really get to? This is what I want to get to is we're seeing a lot of this state-owned activity. Could this be a changing of the narrative, right? That it's not like is Stephen Moran, okay? Boy, this gets tough. Is Stephen Moran, when he comes in there and he says, we need a third mandate, okay? And he's been pushing really hard. And all the old timers that have, Larry Summers, all these characters that have been around forever, okay, who've controlled the narrative for the Treasury and the Fed for a long, long time. And now you get Stephen Moran who comes in and he says, yeah, I think we need a third mandate. We just need low, steady interest rates for a long period of time. And he sort of negates that, he says, well, the inflation and the job growth, that's sort of, those are important, but we have to add this third one. The other ones are saying that's nonsense, right? We don't, but they can't meet the mandate of the inflation, right, at 2%. And we know that jobs are probably going to come under pressure with more and more of this technology coming. So the old school is changing, whether they like it or not, right? This whole thing is breaking down. So the question is, can you get to these low interest rates and hold them there and artificially hold them down there? That sounds great, right? But it's more of this state-owned, government-controlled, technocracy type of stuff, all right? Again, whether it's by plan or by default, that seems like where we're headed, okay? Because again, job situation is going to change with this technology, and the inflation isn't the story that they've always told us, okay? So is this state-owned? And that's the theme I want to hang on to today too, because we're going to get down here and talk about another acquisition that the U.S. just made overnight into a Trilogy Metals. Stock's up like 200% in the pre-market today. It was like a $2 stock or something like that. It's like a $4 stock. And the question is, is this a good thing for the U.S. to be getting involved in? Because they're going to say it's national security, right? Oh, this is all about national security. We have to acquire the metals, for really essentially for war, right? For national defense, for this Golden Dome, for all these other things, right? That, that we're talking about from a defense perspective, and for, security, for supply chain too, right? If we're going to make these chips in the U.S., then we need the supply of all these goods, right? All these metals. So somebody's running the numbers and saying, okay, if we're going to make chips and we're going to have Intel do these, these AI chips in the U.S. and Taiwan Semi is going to have to do this in the U.S., then we probably should procure all the things that we need from safe sources, not China, not other places that can pull the rug on us. So again, a lot of these things sound really good, right? And it leads towards state control, right? Government control. So government control of the interest rates, And I've always wondered this with this cryptocurrency because currency is connected to debt, right? And in the breaking down of this boundaries and borders, it leads to the idea that, like, how are you going to connect the debt to all these independent digital currencies that are floating around the world? And how are they going to, and you can see how quickly things can get out of control. Once you take things private, the government doesn't like that at all because there's no control over it. There's no oversight. And economies can squirt up pretty quickly and get out of control on them because, people talk, right? And things go viral. And so they don't want that getting out of control. And that especially economies like in Europe that have always been controlled, right? They've always been government controlled and they always kind of muddle through things. All right. So, and that's why France is in the problems it's in, right? That's a lot of the reasons why the euro and France is in the problems are in, is that they've been state-owned. They've done this before, right? They've held interest rates low, thinking it's going to do good things, but it really doesn't. It creates zombie corporations. So this is that big concern, hopefully that's making sense, right? There's a lot of things to be connected here, but when you take away capitalism and innovation, right, and you lose productivity, okay, the question is, are we crossing that Rubicon between old school productivity of human beings and productivity and AI productivity? And once you start to eliminate some of these, or potentially eliminate some of these things of the past, right, that have made capitalism work, okay, the idea that you can, work hard, make a business, create a small business and it prospers and you can sell things in a free marketplace, right? Where the best product wins and the best service wins, right? The best time, most timely, best price wins, right? These kind of things. When you start taking those things away and you start creating these sovereign wealth funds and these different entities that are state-owned and state-driven, and the government's picking winners and losers, and the government's setting the interest rate, which is essentially what Stephen Moran is saying. We just need that third mandate of low interest rates. And when you think about the inflation and you think about the jobs and you think about how that's going to change, okay, now we start wondering, is this a state-controlled situation with low interest rates, all right, where they're going to just set this thing at 3% and control it and try to hold it there? It usually doesn't work, right? Unless you have massive controls over the whole situation and you essentially control. It's never worked before. And I want to show you a chart today in the Swiss franc where the Swiss franc used to be pegged to the euro, okay? And in 2015, pegs don't work because, again, it's controlled. It's the same kind of a thing. It's state controlled. You're trying to peg a currency to another currency so that you're, oh boy, I'm getting deep now. So let's say you're trying to sell chocolate from Switzerland into France, right? And all you want is a level playing field. Our chocolate's better than what they're making in France. We can deliver it quicker, better. People want it more, everything. But let's say the currency shifts and the euro goes up relative to the Swiss franc. Now, all of a sudden, you're like, yeah, that was great last year, but now the currency has shifted. And now that chocolate, it's just gotten too expensive, right? They can't, even though they want it, and even though we can deliver it faster, it's just gotten too expensive. So people are going to an alternative only because of the currency translation. So then that means Switzerland comes in, pegs to the euro, and now it's a level playing field, right? At least as long as they can hold that peg to the euro. And now the currency doesn't become a factor in that whole thing, right? Now it's regulation and all this other stuff that's gone on across Europe. But that gives you an idea of the point of that. So when we talk about this stuff, and we talk about, holding a peg or trying to control interest rates, you really need to let the market control the rates because the market knows better than a government does, unless, right, they're taking in all the information and they're monitoring everything, right? That's the game changer. If they've got these, quantum computing and, AI, AGI, right? Artificial general intelligence. If they have this AGI and they think, right, that they can actually now control the system, the game changes, right? Because before they couldn't. Do they think they've crossed this Rubicon to now that's where they can? All right. Okay, so let me introduce this thing with Bukele. All right, so I wanted to throw this in there. Hopefully this fits. just trying to pull together what's going on, with all, again, because I'm learning a lot as we go through this stuff too, and I'm trying to pull it together. So there's a lot of things, and hopefully this is coming together, and it's hopefully not too boring. That's the thing. But I think it's very important because this stuff is, you know, I think I've got a decent read on how this is unfolding, and I don't like where it's going, and I think there are things people need to be, one, they have to understand, or at least understand generally how this stuff functions so that they can make decisions and be offered a slate of things, a slate of opportunities that can help, you know, uh, slow down or offer another highway, right? Getting on another road, okay, from what we're used to, because I think that's where we're headed, and I don't think that's too hard to think about because all this technology that's apparent. Look, not even that. Just look at the amount of money that they're spending on this AI, Open AI, AMD. This constant, just hundreds of billions of dollars being spent. Okay, that by itself should tell us, right? These guys are going full speed ahead, and they're not stopping, right? They are not stopping. So that alone, I mean, who cares? Who cares what I think, right? Those are the facts, right? They're spending that money, all right? So with that in mind, you look at a guy like Bukele down in El Salvador, right? And this kind of ties in with what we're doing now. A little bit of politics here. You look at a guy like James Comey, all right? First guy to be indicted, right? And so, people are saying, Alex Jones and others are saying, see, I told you, Comey was going to be indicted. Then the next one is, what's the next one? There's a series of them, right? This guy's next, and then, she's next, and he's next, right? They're all going to be indicted. Okay, great. The point is this, that, in El Salvador, Bukele said, if he hadn't gotten rid of the judges, right, then there's no way that he could have turned El Salvador around. And that's kind of where we're at, right? We're at this spot where the, it's not fair, right? We know that it's not a fair playing field. Okay, we take a guy like, look at all the people under Trump 1.0. As soon as he came into office, right? Flynn and Stone, right? All these guys basically perp walked. They show up at their door, SWAT team, media's there to cover it. Just to not only kick someone and hurt them, but then put salt and kick dirt in the wounds when they're down, right? And so we see Comey, and this guy gets nothing, right? They haven't pulled his passport, okay? They haven't taken any of his digital equipment, right? They haven't perp walked him. He has until the 9th, I think, to turn himself in. He isn't even foreseen as a flight risk. Okay, so again, we know this isn't fair. Why is that? A lot of this is because the judges. A lot of this is because it's been a one-sided judicial system for us. All right. Now, Bukele is also, if people think of Bitcoin, and I think even now Tether is located in El Salvador. I'm pretty sure that's the case. Point is, they turn this economy around with first cleaning up the crime, okay, then bringing in an alternative currency, Bitcoin, right? And it's sort of been a test model, right, for all this stuff. So I don't know about El Salvador's debt, in today's debt day. So I should have probably done some research on their debt situation, but they are claiming, and a lot of people are claiming, that Bitcoin has been part of the savior, a big portion of the savior for El Salvador. And as I dig into this deeper and deeper, I'm not buying that to be the case. So again, back to rule of law. Just keep that in mind, right? Back to rule of law, back to Bukele, El Salvador as a model for this potentially new style of government, okay? A test ground, all right? And I don't know if I'm right on this. I don't know. But I am seeing this, and I'm thinking about this like, okay, and they're referring to him. The reason is, yesterday I was watching some stuff, and they kept referring to Bukele. And I'm like, why are they using him, right? And that's why I wanted to bring this up, is because I'm thinking about it a lot too. Like, why are they bringing this guy's name up as a model for this stuff? And then you think of the Bitcoin, and you think of what they've done and how they've turned their economy around with Bitcoin. And what does this lead to? Currency, right? Currency is a big factor of how you can control people. All right. So that being said, let's keep moving here. I want to get to a couple of these things. So this Takaichi in Japan, okay, we saw that come through. She wins. Did she win right? Was it straight up? Was it a fair, straight up election? Okay, or was she, because she's a woman and she's cute, right? And she's comes from humble beginnings, and she loves rock music, and she's a drummer, and she follows Shinzo Abe, which is basically free money handouts, easy money policy, and all these things, and defense, right? How handy is that? All these things that she is supposedly for. Okay, it kicks the can down the road, right? She's the perfect thing. She's the perfect person. Okay, perfect. She fits the thing perfectly for kicking the can down the road, right? Delaying what's coming in Japan. All right, so then we look at what's going on in France, and we really need. This is really the point of today's show. All right, is tearing into what's going on in France with this Le Cornu. So this prime minister, okay, again, Francois Macron is the president. We know, Brigitte is his wife. We think partner, whatever. Most of you probably know what that's all about. Is Brigitte a man or a woman? All right. Then we talk about this. Okay, Le Cornu was in place for just 27 days as the prime minister. All right, so that says. And what he was out speaking a little bit yesterday, and he says this is all about the budget, and it's the priority in these crisis talks at this point. So something's not going well. Obviously, something's not going well in inside the French government around these budgets. And what does this boil down to? They know that if they pass what they want, it's going to be hard on the people, and the people are going to protest. So they know they're on the edge. Okay, and the people in France will protest, right? And they have been protesting. So they know that if they pass what they need to pass to quote unquote kick the can down the road, okay, like Japan potentially is doing, then the people are gonna probably erupt, right? They've talked about taking away vacation days, holidays, like for instance, if you take away, it's one thing to take away, the day after Thanksgiving. Okay, it's another thing to take away Thanksgiving. So how harsh is it going to be of the holidays that they're going to take away? We're talking about healthcare, right? We know we're hitting these healthcare curves. It can't go on like that. We know that we have, there's so many things going on in France from the budget perspective, all right? And that's the big issue here. So, okay, currently France faces the problem, okay? And here's the thing that I want to get to with this euro, is that because France has its own debt market, right? And the euro is one currency that fits all these different markets over there. When something like this happens in France, okay, and France becomes an issue and they're having problems, what do you have to do if you're in charge of the European Union or you're in charge of the central bank, right, that oversees the economy for all these different countries? Think about it here, okay? Here we are talking about inflation, and we're talking about jobs, and we're potentially talking about setting interest rates at 3% with Stephen Moran, or some lower interest rate, kind of holding them steady there. When you're the European Union, you're looking at all these different economies, all these different countries with different cultural values. Clearly, right? These people have fought wars against each other, so they're not all on the same page. And now you're going to say, and you're letting them offload different debt markets, but now you're going to try to control everything with one currency. This is where they're going to run into big problems, and this is what's going to implode the European Union. And there's been talks already of them saying, look, we're going to have to France is going to have to exit the euro. Good luck, right? Look how hard it was for the UK. They're going to try to hold this thing together. They either need to just completely just blow it up, right? Or they need to try to hold it together. There's almost no in between. You can't sort of kind of get off drugs, right? You either have to get off them or you have to just stay on them. And that's where they're at, okay? All right, so two things Macron could do. He could call up a snap election for the prime minister, most likely a parliamentary election, okay? And then he could also resign, right, early, which he said he wasn't going to do, and he could call presidential elections. This is what his opponent, Marine Le Pen, is calling for. She's saying, hey, look, this has gone on too long. You've done this too many times. You can't keep a prime minister. Something's going wrong. Your system's not working. The people aren't accepting it. And not only that, but there's a lot of, people inside the government that are just, they're not on the same page, and they can't get people on the same page. So this thing's coming apart, okay? So this Le Cornu resigned, like we said, less than a month after taking the prime minister position, right? And so the question is this, this is what it will lead to, is the people of France will start saving their money, which is a good thing, right? We're supposed to be savers, right? That's theoretically, good thing to save some money, right? Well, the problem is when they start doing that, it slows down the flow of money, right? People less transact less, and they transact more privately than they do through the old, they're going to look for alternatives. Okay. They're going to try to go underground, right? Instead of paying the higher taxes, which is probably part of this budgetary process, they're going to go underground. How are they going to do that? Potentially with some of these privacy coins, right? That's a lot of the reason why Bitcoin probably did as well as it did for so long and what gave it its base was people moving money out of China into other currencies and other places, right? And they had to use Bitcoin to do it, right? It was a conduit, right, to get money out of there. So the question is, what does France do? Do they sort of start going underground? They're pretty innovative people, right? They're a lot like us. That's why they gave us a Statue of Liberty, right? There's a lot of similarities between us and France. There's a lot of dissimilarities too. But the point is, do they go underground? And do they start transacting outside the economy, which again makes the economy looks weaker, which takes away more power out of the government? Because again, people need certain things, but they can barter, right? Okay, I need a couple chickens. I'll trade this for that, whatever. And they keep it all underneath the radar. What does it do? It slows down the velocity of money, right, through the system and it causes a recession, maybe worse. Okay, this is what causes these fractures. This is what causes things to snap, right? All these currency pegs, they break for reasons like this. The euro, we've known it's going to break for a long period of time. Can this be can this be the beginning of the breaking of the euro, right? And that's the big question. Okay. And then, so the way I put this is, when it's one person who's running toward the exit in the theater, and a guy gets up and runs to the door, he's a fool, right? You just look at him, you're like, what was that guy doing, right? When three to five people get up and run for the exit and they come from different places in the theater, all of a sudden people are like, uh-oh, they know something we don't. And pretty much everybody starts running for the door. So that's the question. Have we crossed that barrier from one fool running to the door, okay, to 3 to 5 people running for the door? And once that happens, then it's everybody runs for the door, right? And that's when these things implode. So that's what we're watching for. Okay. In the UK, this is comical, right? This is unbelievable, all right? So Rachel Reeves, the Chancellor of the Exchequer, all right, the headline is that she received a rare budget lifeline, okay, from UK inflation. So higher prices, okay, in the UK are giving a budget boost for her to manipulate, massage the numbers, right? So, and I think it's like $5 billion of net taxable income is now available because of inflation, right? So they're able to massage their budget because of the inflation. So this is a circular reference, right? This is not good. When you start using bad things for the people to change your budget, right? Again, this is a problem, right? This is a problem. And you almost can't believe it when you see these headlines. All right. And then now the Bobble. I mentioned this. The Bobble sees the worst bid to cover since 2021. And this means that, again, people are not showing up for shorter duration. Okay. So remember, if it's 30-year debt like in Japan and people were showing up to buy it, okay, supposedly, right? That's faith in the system when you're able to look out 30 years. This is the 5-year note in Germany. Okay. And again, worst bid to cover means people are not showing up to even buy the short-term debt, medium to short, right? This isn't short. Short-term would be 1 to 3 years, 90 days, 1 year, 3 year. That would be short-term debt. This is more in that short to medium-term debt, and people they're not showing up to buy it. So there's major concern in Germany. So again, France, UK, Germany, those are the big powerhouses of the European Union, the euro currency. And then here's the funny thing. We get Christine Lagarde out saying, I had some notes on this, but maybe I lost them. I wanted to talk about that. But so she's on a separate page, right? She's out there talking about how the euro, this will sum it up. She's out there talking about how the euro they want to see how they can make it become more of a player out in the world. So we talk about this dollar on one side of the teeter-totter, all these other currencies on the other. The euro is the big one on the other side. Okay. She's talking about trying to make that euro bigger and bigger and bigger, right? And displacing some of the dollar. But you're sitting here and watching France fall apart. Germany, right? Their debt market fall apart, right? At least short term. We'll see if it continues. We're seeing these gimmicks in the UK, right? Again, this is the lady who was crying and almost lost her job like 6 weeks ago, 8 weeks ago. And now she's playing these games with inflation, saying because of inflation, we're able to now expand our budget and increase it by $5 billion. I mean, you can't really make this stuff up. This is a system. These are systems ready to fail. So when President Trump calls for low interest rates, maybe this is what he sees. Maybe this is partially even what he's accelerating and causing with these tariffs, right? Because remember, these tariffs put pressure on these countries. So again, if you're trying to create problems around the world, you can accelerate it with tariffs, right? Because again, you can say, well, we're going to target cars, we're going to target this out of Europe, and that's the only place they're making money, and it causes problems for them. All right. Okay. All right. So this is this Trilogy Metals. I want to talk briefly about that. I think we covered most of this, but let me just go through it again. So this is state capitalism. Is this state capitalism choosing winners and losers? Okay. Because again, we just see the stock, and here's the thing. This Trilogy Metals is only 5. I think there's only 5 employees. If I saw that right, if I saw the headline right, Trilogy only has 5 employees. It's now been purchased, okay, by the U.S. government, or 10% of it has been purchased. So it's been backed by the U.S. government. The question is, who are these 5 people that work at Trilogy Metals? What is Trilogy Metals doing? And why is it such a valuable? This is one to watch, right? If you have that small of a company getting backed by the U.S. government, like you have to. How can you not watch this, right? How can you not watch what comes of this? Because if you're those 5 people and you just got a 200% run up in your stock overnight, and you had no idea that this was coming, you're like, yes, we just nailed it, right? We just nailed it. If not, you have to wonder, like, what is going on here? So again, are they, and so far this is all harmless, right? Backing a 5-person company is harmless. Okay. I think, right. I think, but again, we've seen backing Intel. We've seen the backing of Lithium Capital, or Lithium, the lithium company. I can't remember and then we've seen this in a lot of different places, copper, right? All these different ventures into it. So you can say it's for defense, it's for national security. The problem is, maybe it's not, right? Maybe there's something else going on here. And that's what we have to watch for, right? Because this is the perfect transition from a system like ours into a sovereign wealth fund, okay? And then the sovereign wealth fund is a perfect transition and a conduit to technocracy, right? Put things in a holding tank. What's the holding tank? Sovereign wealth funds. Why sovereign wealth funds? Because they're like 12 to 14 trillion in assets around the world. It's a perfect holding tank. There's lots of assets there. You can massage a lot of things when you have the backing of these sovereign wealth funds. And what does it take? It takes little tugboats like these private equity firms to help guide the sovereign wealth funds. And that's what we're seeing when we see the acquisition of TikTok, the acquisition of Electronic Arts, acquisition of all these things that are going into these sovereign wealth funds. And these are the trends we want to watch for. And again, this leads back to the digital ID. And this is what Aaron Day was covering last night. And he talked about 17 countries in 90 days. In 90 days, 17 countries have made a coordinated effort toward this digital ID. So again, I'm trying to draw these parallels that it looks like we're heading down this path. And this is what we have to continue to watch for, because I'm afraid that by the time we're 100% sure that this is the case, it's going to be too late, right? We'll have already gone so close to the cliff or over it that it will be irrecoverable. So that's why, you have to speculate and try to draw these, pull these different parts and pieces together and see what's going on and watch this thing evolve, right? And, and I think I talked about this, but if I haven't, I have to add this in there, is we saw recently the Oracle getting control of the TikTok, the algorithm, the ability to store it, the ability to manage it across its database, everything. We saw Silver Lake Partners involved in that. We saw, Andreessen Horowitz, and even the Murdoch family, again, so the media. And then we know, obviously, there's Paramount, and then that's Larry Ellison's son bought, took private. And then underneath Paramount's trying to buy Warner Brothers. So you have a lot of media capacity there. Not only that, okay, we saw this deal go through with Electronic Arts. I think the biggest video game maker out there. With Electronic Arts, and again, this ties in with Silver Lake and so forth. So these are these little private equity firms, right, that are pushing things into these sovereign wealth funds, all right, and moving these things around, right? Little tugboats pushing things into the big ships, which are the sovereign wealth funds, very, very tactically and very strategically, all in one. And so when you take Electronic Arts and you take TikTok, you can have an influence on probably like 70 to 90% of the under 25 age of population in the U.S. and outside the U.S. probably as well, right? And so the big concern here is civil war, right? And that's why I get so upset with guys like Posobiec and this whole thing that I watch go on, right? I watched Bannon yesterday, even though I really don't like watching Bannon's show. I just wanted to see what they were up to, and I figured Posobiec would be on there because he was out on the Osprey, out on the, naval carriers this weekend with President Trump and Melania. And I wanted to see what he had to say because I'm losing a lot. I at one point in time had some faith in Posobiec. I think I've lost all of it, if not all of it at this point, because he's doing a terrible job covering stuff with Charlie. That's one thing. But I see this propaganda thing of civil war, right? So again, trying to create this civil war. That's what you need as well, right? Global war, civil war. And then you're in big trouble. A country's in big trouble, internally, externally. And again, I hate to sound so pessimistic, but, we can position for this, and that's the thing. And that's what we're going to do is take a look at some markets here. All right, so let's do that. Let's jump in and look at some of this stuff. So the first thing I want to do is go to this. Let me see if I can find this. Okay, there we go. Let me slide this over. All right, let's put this in here. So let's look at this. I want to look at the output on this model. So here we have the currencies, all right? And this is obviously, we've got the vast majority of currencies on here and some currency pairs from the Forex market. Not much going on here other than this British pound. All right, we've got a signal in here. All right, we've got an option signal, a breakout, a harmonic structure. I don't know why this, there we go. On the British pound, that's the Forex market. We have it here also on the futures, okay? And other than that, I don't see anything too big. We got a little bit on the Euro-Japan down in here, okay, the Euro-Japan cross. All right. And again, that's a little bit interesting because what we're talking about Europe, we're talking about Japan. Okay. These things. So again, definitely some interest down there. And then a daily signal in the Swiss franc, which I think I just put myself over that. Okay. So that's the one in the lower left. And then a little bit in the Japanese yen futures. So we've got a weekly signal in there. All right. Let me just light that up as well. So we've got the Japanese yen, and then we've got it also in the Forex cross. And I like to see that it's in the futures market and that it's in the Forex cross market, right? That gives confirmation that it's basically picking it up in two different markets. All right. Okay. So let's slide over here and take a look at this. Let's go over and take a peek at the stock markets. All right. So what I want to show here is here's the S&P 500. Okay. And I'm going to highlight that in red, I think, if it'll allow me to do it. There we go. Okay. So what we're looking at on this one, and I can blow this up a little bit. Let me see. I think. Maybe it's not letting me. Anyway, up at the top, all I really want to show is this. All right, we've got a couple columns here. All right, here's the S&P, and this one we have the daily column. All right, that I'm highlighting there. So up at the top, second one in from the right, and we can see it's pretty overvalued. Right. And again, this one right here, so this lower level, just for your reference, is the most recent. All right. So this is the most recent read. Okay. This one here is, one period ago. So in this case, this is today, last night's data. That's the day before, and that's the day before. Okay. So we're looking at basically 3 periods prior. On the weekly, that's this current week as of Friday. That's the week before. That's the week before that. So almost a month. And then you can see the monthly's been building for a while. So we've had 3 months that this thing's been building. Now, and then we look at the NASDAQ. We have a very similar situation. Okay. We got the weekly is also deeply overvalued and the monthly is deeply overvalued. All right. These are the two that have the harmonic structures in them. Okay. So we see a lot of red. That's the key. Okay. And we're looking at all these different time frames. There's red all over the place. That tells us that this market is, pretty stretched. And this is synthetic sentiment. So what we're doing is taking a synthetic quantitative measure. If we were to go out and poll 100 people, and we would say in this particular case right now in the monthly, in the S&P 500, 96, this number right here. Okay. I know this number. Let me see if I can blow this up. There we go. That should work. Okay. So in this particular case on the S&P 500, the one that I have highlighted here, this cell right here, okay. So what essentially the model runs this and then I dump it back into Excel. And so it's a good way to aggregate stuff. Anyway, Microsoft Excel. In this particular case, that cell right there, that 96 would say, if we were to poll 100 people, 96% of people would now think that the stock market's going up on a monthly time frame. So over the next month, 2 months, 3 months, into the end of the year, into the Christmas season, 96% of people think this market's going higher. If we go to the weekly, 90%, right? And you can see it's been 2 months in a row on the monthly, 96, 96. So 2 months in a row, people think it's going higher. And it has gone higher, right? So they've been right. The problem is at some point it runs to an end. So what do? You look to a shorter time frame. You go to the weekly. Same thing. It's happening on the weekly, okay? Again, big picture view, monthly, smaller picture view, right? 30,000 foot view, 5,000 foot view, and then now you're looking through a microscope. Not quite a microscope, but you're looking through a pair of binoculars, right? When you get down to the daily time frame, right? So now we're looking through a pair of binoculars, and you can see 86% 3 days ago on Friday would have thought that the market was going higher. Monday, 93%. Then today, 85. So it's below it's right at the parameter where this thing would show red. Okay. Now, we're not seeing the exact same thing on the NASDAQ, or on the NASDAQ, we're seeing very similar, right? 94, 95 on the monthly readings. So longer term, again, a lot of basis here for almost everyone thinks this market is going higher at this point. Okay, so what do we want to do? Sometimes you don't always want to be a contrarian, but sometimes you have to be a contrarian. And these are the points in time when it's good to be a contrarian. And that's why I go through this long talk on, what's going on in France, what's going on in the UK, what's going on in Germany, and the things that are going on in the US and around the world, and this war front, right? Because something is probably coming. Okay, we don't know what it is, but when markets get this extended, it's just the way things tend to work. We're at the end of a cycle. If you believe that everything's connected and you believe that people are connected and that 8 billion people on planet Earth are somehow connected, right, through some, these cycles, these natural cycles that occur, if you believe that, which I tend to believe a lot of the time, not all the time, but a lot of the time I believe it to be, well, it's always true. I just can't read it. I believe it to always be true. I can't monitor everything, right? I get little snippets of things. And so it makes me believe that that's the case. There are things I don't understand, right? But the point is this, I do understand that this market is highly, highly overbought. Okay. And it goes back to all these deals and all this spending and what Ken Griffin was out saying that look, the gold market and, gold's amazing. It's over 4,000 now. So we'll have to take a look at that. Okay. So that's this situation. Let me see if I can bring this back into view. So I wanted to show that. And let me go back to, let's just do that. Okay. So there's the stock markets. And the two, if you look at the stock markets around the world, and I've got, up at the top is mostly US markets. This one over here is Japan. And then you can see German DAX, UK FTSE, the French CAC 40. It's not really that overvalued, funny enough. And even though it's gone up a lot, and the banking system had gone up quite a bit in France, and it's been coming off the last couple of days out of all this fear, it's really not that overvalued, this market, right? So pretty interesting. You can see Spanish IBEX was pretty overvalued in some ways, actually quite a bit. I mean, if you look at this, it's the same kind of a situation. This one over in here, daily, weekly. There we go. So again, monthly is way over. That's the furthest column on the right. The weekly is pretty overvalued. The daily is pretty overvalued. That one's concerning. And we saw good data coming out of there too last week when we saw that, when we were looking at the PMI manufacturing data. The Korean market is pretty overvalued. So this is Korea. This is the South Korean Kospi. The Swiss market is overvalued on the daily, and we have a harmonic structure in here on the Swiss index. So again, they have the SMI, Swiss Market Index. That's their index for their stock market. Want to watch that because that probably will correlate to the currency. That'll give us a good clue of what's going on with the Swiss franc. Okay. And then let's go ahead and skip over. Let's take a look at these debt markets. All right. So we've got on the US, we have an option signal, right? Or a harmonic structure. Hopefully this will show up. I don't know why this isn't lighting up. Anyway, here's the 5-year note up at the top. Hopefully you can see that fairly well. We have a monthly harmonic structure in that. We have a monthly harmonic structure in the 10-year note, and we have a monthly harmonic structure in the 30-year bond. All right. And then we have this thing called the ultra bond. I don't know if we have one. Yeah, and we have one in that too. So the ultra bond is a longer duration. The 30-year bond actually doesn't always have a duration of 30 years. It's sort of misleading. It doesn't necessarily, but the ultra bond is going to have a longer duration. So it's going to be like 25 to 40-year duration, okay, of debt, if there is such a thing. Anyway, the ultra bond, the biggest liquidity ones here are the 5-year, 10-year, 30-year. The 5 and 10 are the biggest, right? They have the most liquidity. They're the ones that are traded the most by the markets, right? The markets use these to do a lot of different things with. Okay, then we get down here to Germany, right? We have something similar, okay? We have at least on the German Bund, we have a signal in the weekly, right? A harmonic structure on the weekly. And that's not lighting up either. Who knows? Okay, so that's the deal there. And then other than that, I don't see a whole lot, right? But the German, we saw the German bobble. So the Schatz is their 2-year note. The bobble is their 5-year. The German Bund is the 30-year. And if we come over here, we've got, I don't think there's much else in the Japanese bond. Again, a little bit undervalued in the Japanese government bonds down in here, but we'll let that be for now. And then if we come over here, we'll take a look at the commodities while we're here. All right, and let's take a peek at this. So again, we're seeing overvalued in gold on the weekly. Okay, I don't know if this will light up. There we go. So there's the gold. All right, so it's overvalued on the weekly and a little bit on the daily. So again, could this be the beginning of some kind of a sell-off? Again, this will be the dollar, right? The dollar will tell us a lot. Okay, if the dollar goes up, gold's probably going to have some pressure to the downside. So will these other currencies, right? And it will have an impact on what happens with these debt markets. All right, and then we see we've got a harmonic structure on the copper here. Okay, and copper we saw was really on fire. We got up to the upper end of that trend channel, got whacked off of there. And now we've got this harmonic structure. A lot of times when markets cleanse themselves like that, they take a lot of the, the fast money, out of the equation, then all of a sudden they become pretty good, right? When it came back down in the middle of that trend channel, that was a decent place to take a shot on it, especially because there were a couple other things there. This harmonic structure should help guide us on that, right? Especially from an industrial metal perspective. Are we going to transition over from more of the precious metals to the silver, right? You can see silver's getting overvalued too. Okay, actually on the monthly quite a bit, right? The monthly's getting, let me just light silver up too. So silver, you can see the monthly's getting pretty overvalued. The weekly's overvalued. The daily's been overvalued. And where are we at? We're up at that 50, right? We're right by the all-time highs in silver, right? 48.50 to $50 per ounce. So it's not surprising that this market can, again, can silver just blow through here? Again, if something really bad's going on in the world, then sure, it can surely just blow through. But the reality is there's a good chance that the stocks are just absolutely ripping. We'll take a look at that chart here in a second. I don't know what came out. See if there's some kind of data that came out. Let's take a look at this. I just want to see if there's anything major. Or if this is just a blow off, right? So this could be a setup, right? They could be pushing this thing higher into the open, which is in 22 minutes. And then they're going to come in and whack it today. We have to wait and see, all right? Are we going to get a retest of some of these levels? And then is there anything else? And then we talked about the soybeans last Friday. Okay, here's the soybean signal in here, right? That's one we're watching there, the soybeans. And the wheat's undervalued. All right, we've talked a little bit about that. And the corn is a little bit undervalued. Okay. And the blue is undervalued, the red's overvalued, the yellow are the harmonic structures. And we get a little bit in the natural gas, a weekly signal in here. We'll probably talk about that tomorrow. Okay, we got this. Let me just light that one up too while we're at it. So, okay, so there's the natural gas, a weekly signal on that. And the nice thing is when you see it across a couple different things, you see it here in the heating oil too. It kind of gives you an indication of maybe where it's coming from, like what sector of the market where's the demand for the natural gas? It gives us an indication. We also have that other harmonic structure in the natural gas we've been working off of. If we climb above that pink shaded zone, and let's see where this thing overlays on it, right? So I got a little bit of work to do to get ready for Energy Day tomorrow so we can really dig into this natural gas as a potential play, right? Something we can really get behind, right, on the upside. Okay, so I think that's that. And let's take a look at, let me go ahead and do this. Let's look at a few markets. Okay. All right, so this is the S&P 500, and I'm going to sell a little bit more up in here. We'll see what happens. Really small positions on in this, but I would love to. It's been a long time since I've held any big positions in the stock market, so I'd like to get pretty active in it. So we'll sell a couple more. I want to see what happens up in here. See if we don't get a little bit of a sell-off. Okay, Here's what we're looking at is this was that harmonic structure, right? The white dashed line that we had. Let me move over here so I can see the chat. I've been kind of distant here today. All right, so let's see what we've got. Let me go through the chat here real fast. So we've got BDG, Geo Rich, Trumpet, Jay White, Crash and Splash. Good morning. Happy rain day. Yeah, Rachel Hawk. Okay, Filippo, that was a great rundown yesterday on Kirk. Amazing. TP so silent. Yeah, I agree. It's just very disturbing that it's been so silent on that stuff. Okay, Gordon Q. Be careful what you believe about the Charlie Kirk. Deep State is also weaving in narratives to sow confusion and split their opposition. Yeah, I think that's right, Gordon. So if you've got anything, throw it in here. I'd appreciate that. TZ Burton, good morning. We're still surviving without the feds. Yep, perfect point. Penalize the EPA. Penalize again industrial base. Okay, TZ Burton. Craig isn't Citadel hedge fund a big Chinese investment firm? Boy, not on the surface, right? Citadel is Ken Griffin started it up, right? He was where it gets. That's a good point. That's a good point. Let's come back tomorrow and look at that Citadel. I want to do a little bit of work on that, where it gets its money. So let's all do that. Let's do a little work on this Citadel, because this Ken Griffin, remember, this guy named Warp Speed. Okay. He says it, right? I have a clip somewhere of him saying, look, I was one of, if not the guy, right? Citadel named it Warp Speed. All right. I don't know how. I think that makes no sense to me, right? How a hedge fund named it Warp Speed. But he was clearly involved in Trump 1.0. He's clearly at the table. And I mean, I almost don't believe it. I almost have to pull that clip up. I'll see if I can find it, right? We'll play it again because it's mind-boggling. But I need to do some work on where is Citadel? Who's investing in Citadel right now? Who is it? And who are the players involved in this? If I can find it, right? And it might not be easy, but it's worth doing. So that's a great question. We need to figure out where Citadel's interests lie. Okay, here we go. Crash and Splash, cost of business in the U.S. forced. This sounds like our collapse. Okay, yep. U.S. forced this. Sounds like they are collapsed for a while. Okay, why not peg the Fed rate to the 2-year? Could do that. I mean, I think that's reasonable. Maybe that's what they're working to do. Yes, judges, we got to take back our judiciary. David Rocket, I was there last year, and everyone uses dollars for daily transactions in ES. Oh, in El Salvador. Got it. Yeah, isn't that funny? So everyone's using dollars, even though it's Bitcoin capital. Okay, and then Filippo, the Dow to gold ratio broke below 12. Only happened before the 1929 crash and 1970 stagflation and the 2008 crisis. That's a great point, Filippo. Let's look at that. So great points in here. Citadel, let's look at that the Dow to gold ratio. Pretty important. Now, the Dow hasn't participated. So maybe what we also want to do is look at the Dow or the gold to S&P ratio, right? The gold to the NASDAQ ratio. Just to give ourselves a little bit, but I like the idea. I love that idea. Let's look at that tomorrow. Okay, here's the S&P. Here's the white dash line. This was a full upside objective in this thing. Let me mark this off here. So we had this, pretty much got there. It for sure got there. It tested it there. This is a December contract. Remember, I was on this is a December contract. I was focused on the September too much. I should have been looking ahead, right? Because we didn't see these things hit. Because again, the high liquidity was in the September, but the December was hitting the full upside objective. So I again, note to self. This has happened to me before, and I just have to make sure we don't miss that again. Because that would have helped, right? That would have helped, I think, right? To watch this thing hit it 1, 2, 3 times and then pop through. We would have said, because I was looking for a potential top here, right? It's a 65.74. And once it popped through, especially on the September contract, I was sort of like, this doesn't make a lot of sense. It just doesn't, something's not adding up here. Then we flip over to the December contract, right? When the volume flipped, and then you look at it and you're like, oh, there it is. I should have been, how was I not watching this December contract closely enough, right? So again, my major error. So again, S&P looks really strong. We see the overvalued on the daily, weekly, monthly. Is there going to be some kind of event in the next couple days? Okay. Check out Martin Armstrong's site. He also has his model is calling for the 9th for some disruption in the world, right? In the euro, other places. Again, it's funny when, these things start to line up. I start to put more credence in what he's saying when I have things that back it up as well. And I'm starting to see it too. So are we going to see some kind of event in the next day or two, the next couple days, this week, that is going to turn this market? Okay. A major shift. He's calling for a significant shift in things, direction change. I don't know, right? I'm more, I'll use the overvalued in this, and then I'll come in and I'm not trying to call the top, right? I think that's a very dangerous thing to do, because when you're wrong, one, it doesn't matter, right? Being right in these markets doesn't really matter. What matters is managing the risk, okay? Being right and making money are two very different things. And so being right, I'm not so concerned about that as I am, helping manage the risk and protecting people and giving. And if this does start to roll over and something doesn't look good, that we're thinking about the technocracy and how do we position away from that, right? We're thinking about these things and trying to get out front of it. And having that mindset that enables us to think our way through this instead of panicking, right? Instead of going into some panic mode, we're like, hey, that's no surprise to us. No big deal, right? What do? Set it up. Let's start trading this thing, right? Let's think about it, right? Let's think about like what Filippo said, let's look at this Dow to gold ratio. Let's look at these other things, right? Give ourselves more confirmation. We don't have to be right. You know what I mean? That's the key. We just have to stay out of trouble, you know what I mean, and set ourselves up to win, when it works. All right, so there's the Dow. Or the S&P. I wanted to look at that. Remember, the Dow this is the daily on the Dow. It has started to participate, right? We watched it all the way through here, and I kind of got fooled by that too. It got up there, wouldn't break through, and those others weren't, again, on the September contract, weren't getting the full upside objective. Okay, so anyway, the Dow is moving to new highs. And look, this thing could crest 48,000 and it could drive to 50,000, right? I mean, it's a big psychological level. If it crossed 48, I think 48,200 to me just feels like you've crested the hill and it's downhill to 50,000, right? It's easy pathway and they'll gun for it, right? So I think they'll gun for that 50,000. Why? To draw people in. So even though we have this extreme overvalued, it doesn't guarantee a top, right? It just alerts us to something's building, and at some point we're going to see something probably really bad happen. Okay. Is it this week? Is it a month from now? Is it 2 months from now? I don't know. But usually this stuff, right? Not every time, but usually when you get this overvalued, something snaps. All right. That's all I can say. We're getting to the point where something could snap. All right. Let's take a look at this Russell. I haven't looked at that one in a little while. Let's look at the daily on this one. Just because this is the small cap, see if there's anything new on this. Here we go. Hopefully this will work. Boy, I don't know what happened to my chart. I was cleaning some of these up and I've made a mess out of this one. All I want to do is get to this Russell. Jeez, look at all these charts. Oh boy. All right. Well, maybe we'll look at the Russell tomorrow. We'll look at the Russell tomorrow. Again, I think that's where I left off cleaning these things up the other day. The Russell, a lot of stuff on there. All right, and then I wanted to look at this Swiss franc. Let's go look at this. So I've got this. Here I've put together I started doing this on the Forex market. All right, so this is the monthly time frame on the Forex market. And I want to show you, let me go to this one first. All right, so I've laid out a couple cycles on here, a couple downward sloping trends, right? The purple lines coming down here, essentially converging right around in this area. Okay, a couple different trend lines converging down in here, right? And if this Swiss franc can pop above this down in here, let me blow this up. See, oh boy, turning into a mess. If this Swiss franc down in here can start to pop above, this is a pretty steep downslope, okay? Now you can stretch it out and it won't look as steep, right? So I don't want to distort it. The point is that if this Swiss franc can pop above these purple lines, let me just throw this in here. Let me throw a box on here. I think if it can pop above that purple shaded zone, then I think this Swiss franc has some definite potential to do a rebound, if nothing else, but to something like this, maybe up in this area, right? Something like that. Something like this. Those two areas would be big checkpoints, I think. Okay. That's a big move, right? There's a monthly signal, and I think it could happen fast. Okay. Again, there's a lot of energy. We see that. Let me just show this, right? We've got a big energy build here. Okay. One of the biggest I've seen. Okay. There's that big energy build, the red going inside the white. It's been going on since what? This kicked off in 2017, early 2017, and it sort of has just come out of this energy build April of this year. So April, May. And that's when I really think I really started talking about this is, around that time frame. We're getting to the end of this energy build. The question is, how's the energy going to, it's breathed in for a long time, and it's been in a downtrend since the 1970s. And that's the key. Is something about to change on this Swiss franc? Okay, something globally. And I've got a couple things in here, right? I put in some time cycles, these yellow lines. All right, this is, and I marked them, right? Let me just put this. I marked some of these things, it lines up nicely. This is where the thing starts from down in here. And then this was the first point. Then you can see a couple different choppy things in here that line up incredibly well, right? There were definitely some small direction changes back through this area, like this one right in here. And so what we're looking at are these yellow vertical lines. So we have some cycle switches. We have another one that lines up incredibly well right here, okay? And then another one that lines up incredibly well right down in here, right? So this thing seems to fit. Now, where it projects to is this next one right in here. So some sort of a significant shift here. And again, that's not till June of 2027. So is that when we're going to see a move in this, right? That's when we've seen these direction changes with this cyclical pattern that's held really well since this was 1979. So the first point of this cyclical structure, 1979. Again, I'll get into what all this stuff is, but the point is these yellow vertical lines are these turning points. And, we hear, I just feels to me, my antenna are up, right? Something's about to change globally, all right? And where is it going to play out? Currency is a great place to look. So that's why I'm looking here. I'm looking at the Swiss franc. I think they've been a major factor in a lot of things for the last, 50 to 60 to 70 years, maybe even before that, before the world wars and so forth. So that's that thing. And then if we just look at this, I'll just show you this one. So here's this couple levels in here. This level goes back to that 1978 time frame again. Just real simple, purple line going across. Let me get rid of this, and then I'll show you how this came about. So we got these two purple lines. And you can see a couple touch points, same thing. I put these in there and then I marked them with these yellow circles, all right? Just to show the touch points on this, that it has a memory in those areas, okay? So again, a pop up into this area doesn't seem like it would be that hard to achieve, all right? Now, this thing has a perfect Fibonacci on it, extension. Okay, so I think so it's off of this low right here, okay, which was wrong one. There we go. So why did I pick this? Because there was a prior low back in here, and I want to catch this wave, right? So I go right off of that, and you can see this 1618 extends exactly down to where this thing stopped. So you can see it's exact, right? And it turned that market. Let me just blow that up so you can see it. So it stopped exactly on the 1618 extension right here. Okay, and then it came down, tried to retest it, couldn't quite get there. Now, this is what I was talking about earlier, right? When the Swiss franc couldn't peg anymore to the euro, right? It blew up in 2015. And this was a one-day spike. It was like 4 in the morning, they broke the peg, and the market went up and down and up. And I mean, it was crazy swings, right? I mean, there were people that were up 500,000, down 500,000, up 500,000 in like 5 minutes. It was crazy, right? Probably more than that, but, traders that I knew, right? Anyway, so that was this, couple things, right? We're just watching this thing, see if it's tapped out, and where's the timing on this stuff. And I think the Swiss franc is going to be, my gut tells me the Swiss franc will play a key role in this stuff. Is there anything else? Let's take a look at this silver. Let's just look at that quickly. So you can see the silver. I remarked these. We had the yellow lines going across there. I turned it to purple. This is that prior high back in here, okay? And you can see we're almost at that thing here. It's close enough. This Swiss franc could stop here and come up short. Trade off a little bit, maybe trade back into here. Okay, maybe, right? Everything's a maybe at this point, right? Because this market is just, you can see, I mean, this is incredibly strong, right? And just for reference, I mean, we had what was it? Back when I was doing Market Ultra, and early 2024, early 20, is that right? 2023, 23, 24. Anyway, whatever. There was a call down here at 2214. We had a full downside objective on the harmonic structure, and that was a nice spot because why? We saw this converging triangle come together. The harmonic structure had played out exactly to the 2214 an ounce on the downside. And that basically put in a floor where you could say this was a nice spot in the silver, right? And now you see this thing play out this fast. It spent a lot of time through here, kind of going sideways. It was pretty choppy through there. But other than that, I mean, that was a pretty low risk spot to take a shot at this thing. And so is that what we're seeing in the Swiss franc? Something like that again here. Again, it's not the same structure. It's not the same layout, but it gives you that gut feel that something can potentially happen in this Swiss franc, this dollar, these other things, like something feels like it's going to happen. All right. So debt day, let's take a quick look. Let me just look at the debt market since we got to at least look at the 10-year note. All right. And here it is. So I've got a new harmonic structure in that. These are these pink lines. All right. I'm going to go ahead and build this thing out today. We'll come back and look at it tomorrow, but you can see it, the price. Let me just blow this up so you can see it. The price is basically sitting right inside that pink, in between those two pink lines. So when I build this out tomorrow, we'll see the harmonic structure laid out. We'll look at it, compare it to a couple different time frames. And this should be indicative, right? This should tell us a lot. The dollar should tell us a lot. These currencies should tell us a lot. What gold does here, the stock market being overvalued. You can see, right? I don't think it's hard to see where things are at a potential shifting point and again, when you see Martin Armstrong's not perfect. I've seen him make calls and then never comment on it again and leave people hanging out to dry. I've seen him do it in weed. I've seen him do it in other markets. So again, I don't want to, but he's a good thinker. He's done a lot of work, and I've seen his work be incredibly right sometimes. So I don't try to blow it off. I try to pay attention to it, especially when it starts to line up with things I'm seeing. And I'm seeing that at this point in time. So take that for what it's worth. We'll come back. We'll just break it down day after day, keep doing this. And with that, we'll wrap it up. A lot of me talking. I still don't have, I just need time, right? I just need time to it could be 30 minutes. It could be 3 hours. I don't know what it is, but once I get started to try to get this thing set up so that I can do videos, clip these videos again, because there's not just one issue, there's two issues. I got two hurdles to clear. Once I get that, I'd love to show you this Ken Griffin thing, right? I'd love to pull out a 3-minute clip and show that, because it would give us, it wouldn't be me talking the whole time, which would be great for you, probably more than me. But but anyway, I'm going to try to get that fixed here at some point when I can spare the time. And I hope it's a 30-minute fix instead of a 3-hour fix or more. And so with that, have a blessed day, everyone. We'll come back tomorrow, take a look at some energy stuff, take a look at this natural gas, take a look at some other stuff. For those of you who are traders out there, happy trading, and we'll see you tomorrow. Thanks.